Good evening, traders. Zach here with the Trading Network. Hope you guys are doing well. It is Tuesday, June 8th, and I've got another daily market profile recap for you for both the ES and the NQ futures markets. First and foremost, let's get into the key levels. I hope everyone is off to a good start and they are dealing well with this choppy price action, this small or little to no directional conviction in regards to what we've seen thus far, and really last week as well. You know, we had a lot of ranging price action, and although we did move up and we are using prior highs as support, we really haven't gotten a ton of directional conviction. The ranges have been small: 18, 16, 24 and a half, 29. So nothing really to write home about as far as extension wise. But nonetheless, pretty good trade opportunity if you have been able to pay attention to this market structure that we've had. So without further ado here, let us dive right into the key levels, starting with the ES futures key levels. And I was looking at, first and foremost, the overnight high at 42.36. You can see that right here. Second key level I was looking at was the prior range high right down here at 42.30.50. Third key level was the prior value area high, 42.24. Also a lot of confluence in this area with the prior overnight POC from the June 6th into June 7th Globex session. The next key level that I was looking at was the prior value area low from Monday's session. That was 42.16. And last but not least, down here at 42.12.25, that was the overnight low in the last key level I was interested in. You can see that we did get a bit more extension down below that into this POC from the June 2nd regular trading hours session, and very close to the June 3rd regular trading hours high. So with that said, we will go ahead and dive on into the NQ key levels. And NASDAQ has been very interesting. You know, we have, like I said, had some pretty rangy price action, but with NQ at least, we've gotten a bit more extension than we were seeing earlier in last week at the very least. So first key level, just like ES, I was looking at the overnight high, 13.896. Second level I was looking at was the overnight point of control, 13.832. This is right here. I will go ahead and highlight this level, and you can see that this ended up being very, very close to our current or our prior value area high from today's session. Speaking of prior highs, the prior range high at 13.812 was that next downside level, or that next key level that I was looking at in general. And the second to last level was the overnight low at 13.785. Now, below 13.785, I was looking at a very, very important level, which ended up being very close to our low of the day. That was a point of control, the point of control from yesterday. And not only was it a POC, it was a naked POC. So this level, what that means is once this level was formed, or once we created this point of control yesterday, we had not come back down to touch this level again in a regular trading hour session. That leaves the POC naked. Okay, so this was a naked POC. Then we came in the next regular trading hour session and touched that 755 level. And you can see within 3 points, we have another POC, another naked POC. So we came down, we touched this level, and that's why this level is no longer extended to the end of the chart. So if you ever see my charts, let's see if I can just pull one up on the weekly, just for example. So right here, boom. Here's a naked POC on the weekly. This POC has not been touched in a regular trading hour session since it was formed. So this level is extended all the way. I did not draw this. This is part of the market profile. It's automatically set like that because it is naked, showing that it's naked. So you can see right here, this was a naked POC for 1, 2, 3, 4, 5 weeks until we came down and touched that 40.85 level. So something to keep in mind when you see those naked POCs. So last but not least, that was the point of control, or that was the last level that I was looking at, the point of control from yesterday. So we will dig right into the pre-market analysis that I put together this morning, starting with the overnight inventory. So the overnight inventory was majority long on ES and NQ. You can see that the settlement price is right here. And when the majority of the price action is above settlement price, that means that our overnight inventory is indeed long. All right, so just to reiterate, you can see that I have a box here. I'll go ahead and do this once more. So this is the overnight inventory. This is the overnight profile, right? This is settlement price. So obviously majority of the overnight profile is above settlement. Flipping over to ES here, you can see the same thing. We have a little bit more balance of a profile on ES, but nonetheless, we did have a majority of the profile. You can see here Here's settlement, right? So this is where a majority of the business is done. You can see we have a smaller tail under here, and a majority of the time was indeed spent above settlement. So while the NQ profile was more imbalanced to the upside, we still did indeed have an imbalance to the upside on ES, and we can see this as well with how we opened. We can see how exaggerated the imbalance is in regards to how we opened. So just to get into my analysis a little more, you can see that I said at the time of writing, we are looking to open above range and value on ES and NQ. This means that there has indeed been a large change in sentiment since the previous regular trading hour session, and that buyers are indeed in control. Since we are opening above range and value, this means that we are opening with a gap to the upside, and our gap and go strategy is in play. This means if price does not move down rather quickly to close the gap at yesterday's highs, right? So let me slow down here and I'll show you guys what I mean. So if I zoom in here, you can see here's O period, right? So we opened above yesterday's high. Here's yesterday's high. So when we open, we have a very small gap. So when we have a very small gap, it's only 3 points, very likely that it's going to close, okay? Now flipping over to NQ, you can see that here was yesterday's high, 13,812. Now, if we zoom in and we go find O period, we opened significantly above yesterday's high comparatively, right? So we opened 13,878. So we opened, 60 points or so above yesterday's high. So we were opening with a 60-point gap, okay? So what that means is if we open and we do not quickly move down to close this gap, we are more likely to move up and continue that overnight trend, right? The overnight inventory was indeed imbalanced to the upside, or the overnight inventory was long. When the overnight inventory is long and we open above the previous high, we have the gap and go. If price opens up and we hold and we do not quickly move down to close the gap, which we did, again, look for that trend to continue from the overnight. All right, so getting back into the analysis here, you can see that once again, I said, since we are opening above range and value, this means we're opening with a gap to the upside and our gap and go is in play, which I just explained. This means if price does not move down rather quickly to close the gap at yesterday's highs, I will look for a continuation of the overnight inventory to the upside as discussed. Today, I will be looking at the overnight highs as the line in the sand levels at 13,896, you can see that right here, and at 42.36 on ES, right here, okay? So if we hold above those levels, I'll look for an upside continuation and a continuation of the long overnight inventory. If we cannot move and hold above those levels, I'll look for a gap close down to yesterday's regular trading hours highs, and we'll watch reaction there. So you can see that when we opened on ES, we could not even get above the overnight highs. That is not a good sign for continuation of the overnight inventory, and it's a good sign for a correction of the overnight inventory and a close of the gap. Same thing on NQ. We did move a little bit above, okay, 20 points or so, but we did not get acceptance above the overnight high. Acceptance means a lot of time spent there, right? So we would want, for instance, this profile to get filled out. Excuse my strange drawing here, but essentially we would want something like this, right? We want a bell curve to form, and that is acceptance. That means that time is being spent above the overnight high, which means that people are seeing it as fair value or an acceptable price to do business at. When there's a single print selling tail, that means that this is not an acceptable price to do business at. People are not interested in buying. People are essentially immediately interested in selling when you see a single print selling tail. So price opened up. You can consider this an open test drive profile structure. And open, we moved up, we tested above prior highs. Larger players were not interested in purchasing this instrument above the prior highs. And on the contrary, they were viewing it as too expensive, and they drove price right back down to close that gap. Now, it did take longer than the first hour or longer than the initial balance to close the gap, but we got very, very close. We closed that gap in E period, so right after that first hour or that first hour range formed, that's when we came in, and that's when we were able to close that gap on NQ, and furthermore, get that continuation down into yesterday's point of control, close that naked POC, and that is where we got some good reaction, and we proceeded to operate above value from yesterday. To be fair, you can see we did the most business today above yesterday's value area and a good amount of business above yesterday's high. But it is very important to keep an eye on that profile structure and say, all right, well, if we cannot hold above those highs, if we can't hold above the overnight high, that's not bullish, right? That means that buyers are not interested in pushing price or holding price above the highs. So look for that gap close. The gap and go is a very, very clear strategy. You can say we are opening above or below above the highs or below the lows, right? If that happens, look for a continuation quickly. If you don't quickly get continuation, if you get rejection on that continuation, if you will, look for that gap close. So let me scroll down a little bit, and I think I had this cut off. So just to show you guys today, I was looking at the overnight highs as a line in the sand levels, 13,896 and 42.36 on NQ and ES. If we held above those levels, of course, I was looking for that continuation. If we couldn't, well, you guys know what's up. I was looking for that gap close, which is what we got. So just to reiterate here, line in the sand levels, we were looking for acceptance above those levels, which we did not get. We got that rejection, and we got the gap close. So I will not waste any more of your guys' time reiterating the same thing. You guys know what's up. We got the gap and go on the open. We got the gap close, and the bulls were not strong enough, even though we had that overnight inventory that was pretty imbalanced to the upside, especially on NQ. Bulls could not pull it off in the regular trading hour session. So let us go into the targets, starting with ES here. I will flip back over to the ES profile, get rid of some of these drawings, and we will start with the upside targets. Upside targets, you guys know that we did not get any upside targets hit because we did not get above the overnight highs or the line in the sand level. So no upside targets hit, so it's going to be short and sweet to the downside. See right here, this was our line in the sand level. First downside target I was looking at was 42.30. That was yesterday's high. We got that hit right off the open. So we opened, tested above, and drove down right into yesterday's high, and that closed the gap. So first target was the gap close. We got that hit very, very quickly. Second target, 42.24. 42.24 was yesterday's value area high. We discussed that earlier. Second downside target was third downside target was 42.18. That was yesterday's point of control. And the next downside target I was looking at was 42.14. That was yesterday's low. So you can see our first four targets were from yesterday's profile. So if you guys have the market profile, if you guys are using this information or, trying to utilize what I'm talking about in these videos in your own trading, watch the levels from the previous session. If you're keeping it as simple as possible or at the base level, if you're just trying to learn how these work, watch the levels from the previous session, use them as targets, use them, especially the highs and lows from the previous sessions and the value area highs and lows from the previous sessions, use those as major areas of interest, and you will very often see good reaction from those levels. So last but not least, you can see our final target was this 42.07 level, and we did indeed get down there, 42.0750 to be precise. This was a naked POC that we discussed. That was the June 2nd regular trading hours naked POC, and we did indeed once again tap that today, and that was just above our low of the day at 42.0575. So a lot of good action on the downside if you were able to pay attention to these profile levels. If you were able to say, all right, well, we could not even reach the line in the sand level. We got rejected below the line in the sand level. So let me look to those downside targets. Let me watch reaction at the high, the value area high, things like that. And that is going to give you a lot of probability if you're able to interpret that information properly. All right, so digging into NQ here, you can see we got the line in the sand, 13,896. That was the prior overnight high. The first target to the upside, we actually did indeed get hit. That was 39.11 area, and I will flip over to my main chart. Got a lot of drawings here, so let me clean this up a little bit. 39.11, 39.12, this was this R3, which is the resistance 3 from the Fibonacci pivot indicator. This is one of my favorite indicators to use in combination with the other trading network proprietary indicator package. So that was target number 1, and only that got hit to the upside. You can see second upside target was actually 14,000, so it was quite a ways up there. So nowhere near that today. Going back to the market profile, we will go into the downside targets because that is what we have on the table. So first downside target, also quite a ways away from our line in the sand. It was 13,832, that overnight point of control that we discussed previously. So as you guys see, depending on the volatility of the market, depending on what the previous ranges look like, that helps me determine how wide these targets are, right? If I don't have really any major levels from, the line in the sand level or the overnight high down to the overnight point of control, well, there's a very, very good likelihood that we are going to get a move down into those levels, especially if we're opening with a gap and we've got a gap close right below there as well. So next level to the downside, 13,820. We back up here, see if I have enough data loaded. I don't believe I do. So 13,820 was the weekly profile level, if I'm not mistaken. Yes, it was 13,822. This is a weekly value area low from the week of April 12th, so quite a ways away. But when we haven't been in this area for quite some time, we got to look at the weekly profile. We got to look at those major levels from a higher time frame perspective or from that bird's eye view, and that is what's going to give us the juice if we don't have anything there. So next level to the downside that I was looking at was the 13,800, 13,804 level. And this was some good confluence between the overnight value area low. You can see how price basically is bright. This is the overnight value area. And when price gets darker, this is the value area low. So that was my next downside target that I was interested in. Second to last downside target on NQ was 13,785. That was the overnight low right here. And it took some patience to get that move into these lower levels, but man, if you were patient, it certainly paid off today. Last but not least, we had that naked POC, which we discussed earlier in the session or in the video, and that was the last downside target. Again, when you see those naked POCs, especially if we break major levels and your next major level is a naked point of control, watch for price to gravitate towards that level. Do your very best to hold on. If you're in a trade, if you take the break of the overnight low and you have a naked POC as a target, do your very best to hold on, be patient, let price work for you, and more often than not, you're going to see price gravitate towards those levels. So it was a day for the bears. It was a day to get short. It was a day to short scalp and really hold those trades through the major levels and watch reaction. And once again, it certainly paid off. So I hope this information is valuable to you guys. I hope with each video that I post, you guys learn a little bit more about market profile and how I can utilize market profile on a daily basis to give me this consistent edge and consistent profitability. As always, I want to thank you guys very much for taking the time to watch this content. I greatly appreciate you guys liking and subscribing and leaving comments as well. It really does make a difference, and again, I really do appreciate it. If you want to learn more about joining the trading network, check out the links in the description below, where you can first and foremost find a link to my free Facebook group where I release these trade plans on a daily basis, Monday through Friday at 9:30 a.m. Eastern, New York Open. You can also find a link to my website, thetradingnetwork.io, down below, where you can learn more about one-on-one mentorship with me. You can also learn more about purchasing the Trading Network Proprietary Indicator Package, joining our private Discord channel, where you can watch me trade live every day, Monday through Friday, again at New York Open, 9:30 a.m. Eastern Time. I usually trade for 2 to 3 hours at the very least, answering questions, and it is a two-way stream on Discord, so you guys can hook up your mic, you guys can ask questions, we can talk about setups in real time, and it's a great environment for learning to be a consistently profitable trader. Last but not least, you guys can learn more on our website about purchasing the Fundamentals of Futures Trading course, which is a comprehensive course that discusses multiple trading strategies for varying market conditions. I also discuss trading psychology, mindset techniques, and much more. As always, if you guys have any questions about any of the content I've discussed or any of the products I've discussed, do not hesitate to reach out, leave a comment here on YouTube, hit me up on Discord, Instagram, Facebook, any way you can find me. I will get back to you guys ASAP, and I'm happy to help any way that I can. Thank you guys so much for your interest in the Trading Network, for taking the time to watch this content, and I will see you in the next video.